Manpreet, hi, good morning. Firstly, a word on the IIP cheer coming this morning. The CPI data, which is slated to come out, does it give any indication that perhaps the RBI does have further elbow room to cut rates?
Potentially, yes, but I think the inflation trajectory is really the key here. Remember the RBI kept interest rates high for quite a prolonged period, even though inflation numbers actually came off quite a bit. And going into from between here and January, we do have an adverse statistical effect, through the base effect that might sort of put an upward pressure on numbers. So I think it's about patience. I think we did see a front-loaded rate cut. So in the very near term, looking at the next month or couple of months, wouldn't really be looking for significant rate cuts. But if we take a longer-term view, we look out over the next 12 months, yes, there is room for rates to move lower. There is room for growth to improve in our view. And that's why we like Indian equities and bonds so much from a regional perspective.
How should one read into the IIP data? Manpreet, historically, the IIP data has been notoriously volatile. But I'm surprised and impressed and also relieved that this year the IIP data is showing a trend, and the trend is very linear.
No, it's a good number, but like you said, I think the history of the IIP means that we'd get much greater comfort if we see some confirmation of the uptake across a wider range of indicators. So I think one is, of course, through the earnings cycle, which remains very important, but also if you see that begin to show up in other indicators like some of the PMI surveys, that would really begin to provide much more confidence that the growth from an industrial perspective is beginning to pick up. For an equity investor, at the end of the day, it's about earnings, and that's really what matters.
I'm just wondering, I heard you mention in the opening statement that it is not as much about the IIP as the CPI, but the key remains that while retail inflation may inch up further, it probably still stays below a particular mean, which the RBI too should be comfortable with. And the fact also remains that while you can read into the IIP data both ways, because the higher weightage spaces within the manufacturing have grown, but it's still a really good number on the IIP number this time around.
Well, from a monetary policy perspective, the thing is you can read it both ways. One is to say, look, if the converse argument to what you put there would be that, well, if you're getting the growth, begin to come through.
Manpreet, excuse me. Manpreet, I'm not talking about it only from a monetary policy perspective, but from a market watcher's perspective, the fact that IIP is inched up so smartly should augur well, right?
No, yes, it does. And there's no disagreement there at all. At the end of the day, look, it's a positive number, and that's positive for the market. And I think there's no disagreement there. I think if we're looking from a longer term investor's perspective, we are ultimately, 12-month type asset allocators. What would give us greater comfort is, like I said, if we saw that begin to spread out through other indicators. It does bode well for the earnings sector. It does tell us that something is happening, something positive is happening. And that is the view based on which we are overweight Indian equities. But like I said, just given the history of the data series, I think if we saw greater confirmation through some of the other numbers, that's really what would give much more comfort from a long-term investor's perspective.
Manpreet, at a time when globally there is a risk of deflation, global growth is still anemic, there is a yes and no on what will happen to China and a big question mark on what will happen to Europe. Do you think Indian markets can remain isolated like an island?
I wouldn't say completely isolated. I think that's being unrealistic. At the end of the day, there will be some impact through foreign investor flows. But I think it really depends on the nature and how concentrated, those concerns are. If we're seeing sort of a continued recovery in developed markets, we continue to see, positive domestic news in India, then the prospects for Indian equities actually look, pretty good for equities as well as bonds. And that to an extent is what's been happening. India's a good domestic story, so it's almost become the default overweight. But if we see sort of, depressed growth everywhere, if we really sort of go to that, downside risk scenario, which is not our base, if I could emphasize, then you could see, more sort of downside risk. But I think the domestic story is great, and I think that's really what investors are focusing on. Relative to what's happening elsewhere in EM, India looks pretty good.
All right, Manpreet, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.